Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Ajay Sharma. And the closing trades are looking much better than what we started with because 19,700 has been scaled. Quite a bit of buying momentum is what we saw during the trading session today. And slowly and steadily, we have been building onto gains. In fact, all the sectors are now trading in the green. It's Reliance, which is one of the heavyweights, which is pulling the markets higher, almost a 1.5% move there, contributing almost 30 to 40 points on the up move. All sectors, as I said, is in the green. In fact, IT, which was the weakest link on account of the Accenture earning, that too has managed to see some buying action and has moved into the green as we speak. Metals are shining away in the trading session, whether it's the news of value unlocking on Hindustan Zinc, which has perked up both Hindustan Zinc as well as Vedanta. Other names like Hindalco, Hindustan Copper, etc. are also fairly excited. Pharma, that's in the pink of health today. Pull up any of the names, right from Glenmark, which is high by 10%. After that, S&P outlook upgrade has come in for the company, or Aurobindo Metropolis. The entire sector is doing quite well for itself. And then at record high levels are stocks like NTPC, Eris Life Sciences, PFC. So very, very vibrant market is what we have at our hand, Ajay. And looks like that the party and the Friday mood has come in a little earlier.
You know, I don't understand what to make of it. Day before yesterday, we were gaining in trade. Those long positions were forced,
to unwind.
Yesterday, nobody would have carried their long positions. It was a very kind of a capitulation in the last hour. And today, just look at where the markets are at day's high. So very unpredictable. In fact, I will discuss it with our guests also in moments from now. But early morning when we were doing the morning show, around 9:30, I had just tweeted, will this dip be bought in IT? But incrementally, every time, I'm looking at it, Accenture guidance and market is not reacting to it. The lowest point was actually made in the first half an hour of trade. And from there, that dip was bought. So it appears that market wants to buy into IT names, or maybe market knows something which we don't. And, along with the results, but it was a very good price action. Look at that. The first hour of a dip in IT was bought. All the large cap and the mid cap stocks have come back. But the day clearly belongs to Pharma. And I told you that when Glenmark, a name like Glenmark, it was the only pharma company in the listed space with a massive amount of debt.
Yeah.
When they did this transaction of Glenmark Life to cut debt and the rights issue of the Piramal Group putting in so much money, people somehow got a sense that this sector is something to watch out for. Then you saw that the Nirma Group getting into API via that transaction. All of that putting together, and Oro Pharma has revealed that drug which we're talking about.
The Revlimid drug, which will be out in the month of October. But yeah, whatever levers are there, the buying action is really continuing. And the talks we have been having with the fund managers and the high net worth individuals, they're definitely looking at pharma quite incrementally.
And it is not like IT. It has. If you look at the pharma index, it has already moved.
Yeah.
This is incremental buying which is happening. From 400 to 800, Oro had already done that journey. Now it's 800 to 1000, which is actually happening. So building upon those gains. So we'll talk about all of that going forward. Lots to talk about. NBFCs are coming back. Some of the NBFCs. There's already a party going on, but today the Axis report is doing the trick on M&M and L&T housing. Lots of discussion going to happen in the next hour and a half. Varun Goyal is here. Another positive news, is it? Receive EIR. Okay, the stock is reacting positively. 4.5 Lupin. So all the good news seem to be coming together, and we'll start the discussion with that. Varun Goyal and of course Nuresh and Kunal are here. But quick word on index. Kunal, we were talking in the morning how difficult it would be to trade this kind of a market. Stop losses on both long and shorts getting triggered, is it not?
Absolutely. So yesterday was, as you rightly said,
resurgent for
yes. the markets, but today seems to be a completely different day altogether. In technical parlance, and it's a very interesting pattern. It's called as a sandwich pattern for the candlesticks on the last 3 days. So 2 days of green candle and then a red candle in between. It's actually called that kind of a terminology. It generally indicates that possibly the markets have formed some sort of a near to medium term bottom. And I think the only confirmation which one should be waiting out for to create an index trade is to wait out for yesterday's high to be taken out. I think that's 19,765 on the spot level. So maybe another 40-50 points on the upside, and that pattern could get completed.
Okay, that pattern, sandwich or not, will get completed. But Nuresh, have to get your word about pharma. a solid traction here. Will you continue buying into the names, or is it getting a bit dizzy now?
So it's getting into a place of a breakout actually rather than being dizzy. So if you look at Sun Pharma, it's on verge of a breakout about 1160-65. Dr. Reddy's had seen a correction and is recovering. Same is the case with the DV's lab, which is trying to make a breakout. Granules had seen follow-up moves. So overall, across the board looks pretty promising. And the last 3 to 6 month leaders were Aurobindo Pharma and Lupin. They both hit new 52-week highs. So it's very clear the momentum is coming back into the pharma space. One has to be selective and continue to ride on to this move. So positive on pharma, positive on the index as well. Like we discussed yesterday, it was more about a lot of rejects happening yesterday in the last 1 hour. And we've created a similar bottom, which happened last month as well on 31st August. So it could be interesting once we cross 19,760 on the Nifty, say 44,750, 800 on the bank Nifty, that would be a confirmation of a momentum reversal on the upside.
Okay, momentum reversal on the upside. That's a take coming in. So, of course, we were talking about that Lupin news that US FDA determined that the inspection classification of the facility is voluntary action indicated, and the EIR has been also issued. We'll try and actually get more sense from Shrishti on this, whether they have received the EIR or was it in the VAI category earlier as well. But in the meantime, Varun, your bets when it comes to the pharma sector, is it more domestic facing names that you're looking, or is it export? Because the price erosion in US seems to have stabilized quite a bit. Which are the areas that you are watching out for when it comes to the pharma sector?
Good afternoon, Anisha. Thanks for having us on the show. So as far as we are concerned, we are clearly believe that the India formulation story remains extremely attractive. It has been a 10% kind of compounding story for a long time, and we see there are certain players which are growing at a slightly faster pace than that because of distribution coverage and more reaching out to more doctors. So we continue to prefer the domestic formulation story. Having said that, even as far as the US generics market is concerned, I think a lot of price damage which was happening in the last few years is kind of stabilized now, and we believe that things will be much more reasonably paced from this point onwards. And as such, some of the companies which have a large presence in US generics market should also be doing okay. Also, additionally, I think as far as the overall healthcare space is concerned, there is much faster growing opportunities in the hospitals and the diagnostic side. I think we are seeing a very large shift from organized to organized, especially in the hospitals and the diagnostic space. So that sector we believe should continue to do very well for a long period of time. We are seeing a lot of regional chains coming in where people are having a strong presence in 1 or 2 states and then kind of expanding from a cluster perspective. So that space with high return on equity, good capital efficiency, good dividend payout remains a secular theme from a compounding perspective.
Varun, I want to talk about, one of the groups in the market, one big conglomerate, metal and mining, with all interests also in oil. Let's not name it, but I want to understand, in the last 3-4 years, tell me if I'm wrong, I've heard so many different kinds of, we've heard about delisting, we've heard about stake sale, a buyback, and now there appears to be initial plans of a massive restructuring, spinning off all the different kind of businesses into separate companies. How does market, temporarily, yes, of course, traders may get excited on that one, but on a portfolio call, on asset allocation into such a name, how would market actually read into all of this?
So broadly, Ajay, we have very little understanding of global cyclicals. So as such, our exposure to this sector is fairly limited. Our sense, based on my experience in the markets of last 16, 17 years, permanent destruction of capital happens always for 2 reasons. One is too much debt, and second is because of poor corporate governance. So as a prudent investment metric, our belief is that if we can avoid these 2 things, permanent destruction of capital can be avoided. Of course, stocks will still go up and down depending on their shorter term fundamental performance on profits and sales and EBITDA. But if we can keep in mind these 2 factors, permanent loss of capital is avoided. And therefore, from our portfolio construction perspective, we always keep these 2 parameters a very, very high place in terms of when we are eliminating stocks or selecting stocks for our portfolio.
Yes, it becomes difficult to invest in such volatile names as well. In fact, let's do one thing. Let's go across to Somit to try and understand what the latest news flow is about Hindustan Zinc, because, of course, they are talking about value unlocking for their various segments and getting on an external consultant on board to do that. And overnight, of course, there was this news about Vedanta as well, that they have managed to prepay some of their loans, or at least they're trying to do that. Let's go across to Somit to get the perspective on all this news flow.
Well, what the announcement has come in from Hindustan Zinc's side currently is the fact that the company is looking to demerge its 4 units, that is zinc, lead, silver and recycling business. Now, out of these 4 businesses, zinc and silver are the bigger one, and recycling business is still not kicked off on a larger way for Hindustan Zinc. But why they are looking to do so? To create more value for shareholders. Now, a couple of days back, there were also a media report which suggested that Vedanta is also looking to demerge its 4 units which are metal, power, aluminium and oil and gas business. So this kind of indicates that there could be some corporate restructuring in works for the entire Vedanta group company, that is Vedanta Limited and Hindustan Zinc, and that is one of the major reason why we are seeing such kind of up move when it comes to Hindustan Zinc and Vedanta also in trade. Also today morning, another news announcement had come in for Vedanta, and that was the fact that the company had prepaid some of its loan amount to its borrowers. So a lot of positive news flows coming in for the Vedanta group companies, that is Hindustan Zinc and Vedanta. At this moment, only Hindustan Zinc has come out with this announcement where they are looking to demerge their different businesses into different listed entities going ahead, and this will be done to unlock more value for the shareholders. Still no details on what will be the share swap ratio or what will be the valuations that the company is looking at. Only an announcement that the company might consider demerging its businesses into different units.
Okay, so that is the specific story which we are talking about, which passingly Varun Goyal was also referring to. Let's see how it goes from here on. But let's also talk about another area of the market which is very excited in trade. In fact, the full rebound happened. Varun, you have some mid-cap IT names in your portfolio, if I'm not wrong. And what is your call on IT? Are you of the camp which believes everything is priced in, or are you of the camp that believes that growth structurally is becoming, in a low kind of a trajectory, low single-digit kind of trajectory, or you are choosing names which are high growth but in mid-cap side?
So broadly, Ajay, what we have been doing is that there has been a phenomenal rally in several mid-cap and small-cap stocks, especially on the, let's say, defense, engineering, capital goods side. So what we have done is we have taken some money off the table, booked some profits in stocks where we thought valuations was running ahead of fundamentals, and allocated to 3 sectors, which is, pharma, media, and select IT. I think these 3 sectors look poised to do well in the next few years. I think IT has been going through a lot of headwinds in terms of deals not getting consummated, decision making was slow. I think maybe 1 or 2 quarters more we see the sluggishness, and post which we believe that the organic growth rate should start reviving. A big problem for a lot of IT companies, especially the mid and the small cap ones, in the last 2 years was attrition, which has now come very much under control. So from a margin perspective, we see things getting better, and we believe revenue growth should start accelerating from Q3 onwards. And therefore, we believe a lot of small and mid-cap names, there is an opportunity to do bottom-up stock picking. And we remain quite constructive on selective names.
Coming in, IT poised to do better. The growth rate should pick up. And as far as the deal wins are concerned, no complaints on that, because the companies have been managing to back big orders. The other one that I want to discuss apart from IT, which has managed to bounce back very strongly from the lows, that's the stock of MCX. At the start of the trading session, the screen was looking very different for it when SEBI had put the transition in abeyance. Now, of course, our colleague also got us exclusive details about why SEBI had done that, what kind of questions were actually raised by those, some of the traders in Chennai. And now we understand, and the company has clarified to exchanges, that by October 3rd, they will come up with a reply, and hopefully after that, we'll see the transition happening. But before I go to Ankur, let me take the view from Kunal as well. Kunal, you were very positive on the counter in the morning when you said that dip should be bought. The trade has worked out really well. Where do we go from here on? Because because the stock is now at record high
Very
level.
clearly, he said this dip should you bought.
Yes, and I would still maintain that this could be a start of a very big uptrend for MCX. This may not just be a short-lived uptrend that, over the last 2 days you've seen some 8%, 9% up move for the stock price. Today also intraday recovery of more than 9-10% for the stock price. I strongly believe that this is a possibly start of a very big uptrend for the stock. For the first time, I think it's crossed back about that 2135 mark, which was the previous major high for MCX, and I strongly believe that these are the kind of instances which lead the stock into a strong uptrend. We've seen that historically for so many of the stocks, so I would probably believe that we can expect some sort of replication happening for MCX.
Fair enough. Let's go across to Ankur to get the latest on that as to what the story and context is.
Yes, MCX has now confirmed that market regulator has received a letter from an investor group and it has raised concerns regarding the technology for the new launch. Remember, ET now had earlier reported that SEBI has taken an action against MCX new launch, in fact kept in abeyance because there has been a complaint which has been received by an investor group and questions were raised on the technology front, and now SEBI will hold a meeting of its committee called Technical Advisory Committee, and we understand that that meeting may happen as early as next week itself. In this meeting itself, the issues which has been raised by the investors will be discussed on how on the technology front, MCX is ready for the new launch. Until that time, SEBI has kept the new launch in abeyance. Also, investor group has moved Madras High Court and it has sought relief from the court. We need to wait and see what actually comes out of the court proceedings, because that has not begun yet. But as far as SEBI is concerned, we understand that the committee will decide on the issues which has been raised by the investor group.
Thanks so much for putting that into perspective, Ankur. But time now to slip it to a very short break. Don't go anywhere. When we come back, we discuss more stocks with the guests on the show.
Hi.
All right, so while the market has done a rebound, let's talk about what areas of the market should you buy in panic-like situation. Varun, what are you researching on right now? Or are you finding it a little challenging to really good for juicy opportunities, especially in the mid-cap, small-cap?
So Ajay, there is no doubt that there has been a big run-up in the small and the mid-cap space in the last few months. But I think there are enough opportunities for bottom-up stock picking, especially if you are building a portfolio for the next 3, 4, 5 years. I know, like I was mentioning, there are enough opportunities in sectors like IT and pharma. Media is, I think, another sector which looks extremely attractive. I think in the run-up to the elections in assembly elections in November and then going into the general elections in May, there is a lot of advertisements which will happen, and the media companies, both broadcast and print, will benefit out of that. So that is another space that we have recently begun to add into. Pharma, of course, there is the domestic formulation space continues to be an evergreen opportunity, and we continue to incrementally like some of the US generic-based opportunities also. Mid-cap IT, of course, remains attractive selectively. I think the most attractive pocket of the market from a valuations perspective is clearly banking. With the way we are seeing revival in CAPEX-related lending, corporate lending, and of course, retail lending continues to do well for last several years. I think the credit growth for this year too should be of the order of 14 to 15%.
Varun, let me come in over here.
The last full year of...
I'll come to you on lenders 1 second. Varun, I wanted to, Anisha and I have been discussing this media opportunity for some time because we understand the space, I think, a little bit, and the visibility on, ad growth, etc., has improved. But are you referring to the newspaper basket, the 3 newspaper which are going to also benefit from state elections over and above the general elections, where usually the ad and all goes up? Are you referring to them, or the 2 media companies? Are you referring to the listed ones?
Yeah, so I'm talking about both broadcast, or you can say TV and print, should do well. If you see FMCG companies across the board are looking at increasing their advertisement spends because the volume of take has been muted for the last 12 to 18 months. So we expect advertisement intensity to increase. Of course, elections are an added incentive for the next 6 to 9 months. So overall, we believe advertisement spends in the economy are going to get better. Also, in the last 3-4 quarters, as the commodity prices have cooled off, some of that margin benefit will also get directed towards the advertisement growth. So we believe whether it's broadcast or print, both sectors should be able to benefit from the increase in advertisements.
So that's about the media space, both broadcast as well as the newspaper industry is looking good. But just let's shift back our view on pharma, and Lupin is one stock that we were talking about. The Nagpur facility has got the fresh EIR. What does it really mean, and what's the importance of this Nagpur unit? Let's go across to Shrishti to get that information. Hi, Shrishti.
Well, yes, a positive news coming in on Lupin, where its new facility, that is Nagpur Facility Unit 1, has got a clean sheet from US FDA, where the company informed that its Nagpur Unit 1 manufacturing facility has received an EIR from US FDA, where the facility is actually into manufacturing of the oral solid dosage forms. And this EIR was actually issued post the last inspection of this facility back on July 2023, and EIR has been received today, where US FDA has determined the inspection classification as VAI, that is voluntary action initiated, and that's definitely a positive news coming in on for Lupin. Why so? Because you will remember that all these major facilities of Lupin has been under scanner and given objections by US FDA, be it Goa facility, Pithampur, Mandideep, Goa. All these have received warning letters as well as observations from US FDA, though Goa has came out, even Pithampur Unit 2 facility has come out from the US FDA scanner. But because all these major facilities were under US FDA scanner, so Lupin actually shifted all of its new dosage for US FDA and the formulations of that to Nagpur facility. And Nagpur facility is a new facility which till date hasn't received any sort of an objection from US FDA. So now this facility getting approval and a clean sheet from US FDA means that going ahead, all these approvals or all these key launches in the US markets, the gate for all these approvals opens as this facility comes out of the US FDA scanner and receives an EIR. That's why this news is positive for Lupin, and we are seeing the stock holding up a gains of around 4%.
Thanks very much for that. So this is a meaningful one, 4%, almost 1200. Varun, there are two baskets, or if we talk about the two baskets out of many which exist in pharma, one the generic Lupins of the world, generic exporters to the West. The other one, India-centric company with very high growth but high valuations also. Which one offer better value in pharma, in your view? The 4-5 top names, exporters of the world, or India plays?
So, across our portfolios, we always had, 4-5% exposure to the India formulations business. I think that's like a quasi FMCG business in terms of high ROEs. I know growth has been around 10-12%, but our sense is for those companies which are expanding their geographical footprint or adding new therapeutical segments, for them the growth can be 14-15%. So that is a very, very interesting and evergreen kind of an opportunity. So we definitely have a preference over that. Like I said, off late, with the kind of price damage that we're seeing on the US generic side, that seems to have subsided, and we expect even the US generics part to start to do well. We do not expect further stringent methods by the US FDA on the sector as a whole, while ongoing inspections and whatever is routine practice will continue. But by and large, the exponential price decays which were happening seem to have subsided.
So that's about the pharma sector. Just taking stock of what's happening in the market. Hudco is again one name which is propping up. That's high by around 6%. You're also seeing a bit of a move on Chalet Hotels, which is doing well for itself. RR Kabul is up almost 7%. You also have Spandana Spurti up 6-7%. Sobha, JSW Energy, Sun TV, all of them are perking up as we speak. In fact, Nuresh, your view on some of these power names, NTPC, which is having a wild run today, JSW Energy, every dip on that stock keeps getting bought into, and then of course REC, PFC, which have been on an orbit of their own.
So the whole basket has been in a good trend for quite some time. If you look at JSW Energy, it is coming back to 2021 highs. So clearly breaking above those 440, 450 makes it much more momentum on the upside. NTPC continues to be in a strong trend. It's just a little overdone in the near term for NTPC, PFC, REC, but the trends remain strong. So there could be small corrections, but the trends are pretty positive. The most interesting name right now is to look at some defensive names in power which have not done well relatively. One is a power grid, which is in knocking distance of an all-time high. And there is NHPC, which has seen a decent correction recently post the OFS of SJVN. Even that one looks interesting at 70, 72. So the names which have not done well could be more promising going forward. But the trend is something which has come after many, many years. So it could be a lasting one across the power pack.
Okay, so those are the names which are the lasting up movers. But Varun, I wanted your take regarding the home improvement theme. A lot of those stocks are doing well, whether it's consumer durables or whether it is, the specialized names, even the cable companies, etc. How do you justify the valuations?
Yeah, our sense is broadly we are looking at a revival in the residential real estate cycle. I think if we look at for the first time after 2013, we are beginning to see not just good volume of take, but also price hikes across the country. Particularly, I think in the NCR area, the price hikes have been very, very strong. So our sense is this is the beginning of a new real estate residential real estate cycle, and as such, we would prefer to play it through the residential real estate players with good clean balance sheets and a good corporate governance. Incrementally, I would believe the wires and cables company, the building material company are also kind of riding on that growth spurt, which may continue for next few years. And as such, the growth will definitely be strong. Yes, I agree that the valuations in some of these names have run up, especially on the wires and cables and some of the ancillary space. And as such, one needs to be a little careful in terms of incremental buying from this point onwards.
All right, Varun, we'll let you go on that one. Thank you very much for your time today. Also pull up two NBFC stocks. Nuresh, it appears that the note from Axis seem to have done well for M&M Finance and L&T Housing Finance. And these two have done very well actually. L&T Housing Finance from 80 to 100 was a kind of a range. It never used to cross that level. Pull up L&T Housing Finance, but L&T Finance, sorry. But it appears that it has crossed that range and gone into a new territory above 120. Even today, 5% higher. Let's start with that. Nuresh, do you think it's a good trade if one has got into it early today? Or what levels can one look at getting back into?
So as of now, we are still consolidating on both of these names. So we had a large move from March. Bottoms in L&T Finance Holding went up from 85 watt levels to 135, 140. Last 4 months, we've been consolidating. So once we cross 135 and sustain for a few sessions, that would be a short-term breakout. So the trends longer term are positive. Short term, it is still a consolidation. Same way, Mahindra and Mahindra Financial has been pretty range bound, but once it crosses 325 levels, that would be a fresh breakout. So the structure is positive, but maybe it could take some more time to break out, but still remains a buy on dips, and eventually, say maybe a couple of weeks out, could break out going forward.
Taken. So that is the word coming in on M&M Financials, which has been a fresh initiation from Axis Capital and a target price increase coming in on L&T Finance by the brokerage house. But let's take the closing trade picks from our chartists as well. Nuresh?
So that would be a buy on SBI. The stock has consolidated well enough in a tight range for quite some time. A breakout would be in play above 600, 605, and it's not far away from an all-time high of 620, 630. So this is a preemptive buy here, could eventually cross into new all-time highs.
Preemptive buy and wishing for those all-time highs on SBI. Kunal?
I'll go with closing trade as RBL Bank. The stock has already made a fresh 52-week high about 250 mark today. So expecting this momentum to continue for RBL Bank.
Okay, so that's a view coming in on RBL Bank as well. So both the picks actually from our chartists coming in from the banking space, SBI as well as the other one, RBL Bank. But you know what? It is the World Heart Day. So as we slip into this very short break, listen into the advice coming in from Dr. Devi Shetty to how to manage your heart and health better. Simple tips coming in. 10,000 steps is what you have to walk, and it's advisable to wear a smartwatch because that will tell you how your heart health is. Listen into that and we'll slip into a very short break.
first message to everyone is that do not wait for your heart to break down. See the doctors before it breaks down. What we call as a preventive maintenance. Wear a smartwatch and try to walk at least 8 to 10,000 steps per day. There are now a lot of research articles publishing that 10,000 steps per day has a magical impact on your health. Sitting is the next cigarette. So it is very important for you to, even I know your job today means you have to sit on the chair most of the time, but every 20 minutes, get up, try to do some work standing, then you sit. Every half an hour, get up out of the chair, walk for 2-3 minutes, then come back and sit. I recommend everyone to practice yoga. I know everybody wants to build big muscles. Even I was like that. I loved bodybuilding. I used to participate in all these contests, but nothing like yoga. Yoga has a magical impact on your life. Believe me, at least for 10-15 minutes every day, practice yoga. And then please quit smoking. Check your weight. Have a weighing machine at home, which gives you the weight in pounds, not kilos. When it is in pounds, when it goes down, you quickly see something is happening. And today, the villain is not the oil. Villain is the carbohydrate, rice and chapati. These two things are not very good for you in large quantity. Try to restrict the carbohydrate. And my last advice to all of you, become spiritual. I'm not saying you should become religious, become spiritual. Because knowing that somebody up there protecting us, making sure that everything is done the way it should be, is a very, very, very positive force in your life. Good luck. Thank you so much.
It's the same stocks which are doing okay, at least from the pharma space. There's Dr. Lal Path Labs, which is perking up. Metropolis has been doing well. Imami, that one has been a big newsmaker since the start of the trading session, after it got into that aloe juice category as well. So that's high by around 5%. Sobha, Piramal Pharma as well is doing all right. Aurobindo Pharma, that Revlimid launch is definitely getting the street excited. Spark, Concord Biotech, all of these names are fairly excited in the trading session. But what to do with the markets right now, and how do you deal with the volatility that we are witnessing? Let's try and decode that with Sunil Subramaniam. He's of course joining us from Sundaram Mutual Fund as well. Sunil, hi, good to have you on the show. This is Anisha this side. What's your view on the market right now? We were easily cruising around that 20,000 mark, headed for higher levels, and then suddenly back to 19,500.
Yeah, well, it's just a reflection of stuff happening outside India in terms of oil prices strengthening, as well as the US Fed being hawkish in terms of the interest rate outlook and their actions. I think these two tended to be a bit negative for emerging market flows, and India especially is very sensitive to oil. We import 85% of our crude, and hence any movement trend around oil makes a big impact. So I think beginning of September onwards, Saudi Arabia and Russia have been announcing production cuts. We have the winter coming over in the advanced economies, whether it's Europe or US, which means that heating demand from homes will be there for energy. So generally, a firmer energy situation is not so very positive for India. So some amount of short-term tactical hedge fund allocations have probably started moving out. And as we approach December, you typically have the hedge fund profit booking kind of a thought process, because they try to pay bonuses from cash profits. So these are the things which are leading to a little bit of uncertainty, and hence the markets could not capture the gains about 20K and have tended to pause. Because what's countered this is two things here. One is Indian economic news continues to be good. The only concern on the horizon, which will get clarified over the next few days, would be how did the September monsoon actually behave? Because till August we were below long-term average in terms of monsoon. So if September there was a reversal in good news, then again that supports it. If it was not, then a little bit around the RBI policy, which is due in October first week, that will create a little bit of tension. The other thing is that From an economic news perspective, I don't see any surprises. We are in a festival season. This time, remember, we have a slightly elongated festival season with Diwali coming in around mid-November. So to that extent, good news from consumer section, right? Consumer durables and auto and housing should be good news floating around. So that's good news for the markets. At the same time, politically, one has to keep sense on the fact that there are these state assembly elections, which are of key Hindi belt states, which are provide a little bit of a clue in terms of the next coming parliamentary election. While I don't believe that they will have a significant impact because votes will behave differently in parliament, the markets will be a bit sensitive if those elections don't go really the way of the ruling party at the center. So lots of stuff which can cause a bit of uncertainty. So I see that markets will be range bound because for all of the so-called negative news from overseas, right, which I mentioned, you have the strong SIP book, domestic flows coming in and helping mutual funds and insurance managers to buy on these dips. So I think while the markets will be reacting to these flows, there will be a bottom line support coming in from domestic flows. So I would say that just be prepared for volatility, but not really any concern that we are slipping into any bearish stock market phase or anything like that.
Sunil, you're already planning for December, huh?
Yes.
We're in October, you're talking about December, planning your holiday.
Not even in October right now. We're just at the cusp of it.
This is a typical fund manager, mutual fund CEO schedules like by October, the eye is straight on December holiday season.
And we were trying to plan our Diwali programming and all of that. He skipped directly to the holiday season.
No, but coming back on that point, what is happening overseas? You must be obviously running such a large fund, keeping a very close eye. What are the strategic kind of your team members who track macros very closely? Are they giving you any instances what happens to EM equities or what has happened to EM equities 1 or 2 years after? Because last time this US yield level was seen 15 years back. So how many of us actually remember how EMs reacted when the yields remain elevated? So anything you can share with us, or it is okay to be cautious for a few months if that is the case right now?
See, I tell you, what is it? It's not the absolute levels of the interest rate which are so much a concern as the trend lines. You see, the market, you were telling me, ragging me about talking about December. See, the markets are always forward looking. They always discount the past and the present, right? What's there in the news is in the price. What's unknown is what it is. And the market was predicting a rate cut pretty soon next year. But today the Fed stock has pushed that. So it's a trend from the current level. It's not the absolute level. So 15 years back, this level. The point is the market has already discounted the current 4-5% interest rates in the US. Fine, done. Are you going to see that come down? Because that would have happened if there was a hard landing. So what the market now is thinking that there could be a soft landing or no landing, because despite the rate hikes, the news around broadly the US economy is fairly good, except for the fact that inflation is not coming down to the comfort zone of the Fed. So there is no likelihood of a rate pause, rate cut in the near future because it's all now 225. So that's what has changed. And the reason for caution comes from the fact that market always willing to take a short-term spikes into their fold and go forward. But if you're seeing that whole of 2024, if you're seeing a kind of high interest rate scenario, that's where, the fund managers are looking at it and saying hedge fund money, which is essentially leveraging of borrowed money there. Their margin of safety will come down. So to that extent, emerging market flows could be under pressure, and which is what we've been seeing for quite a few months. India was the last man standing. Most emerging markets had been getting outflows from 3-4 months back. India held down till end August. Right. It's only in September that we got a little bit of a shock in terms of outflows.
Yeah, not a little bit. 25,000 crore worth of shock is what we got in terms of the outflows. And you're right, 80% probability now that November will see a rate hike, which wasn't the case just a few weeks ago. But just wanted to bring Naresh also into the discussion, because in the last few minutes, last 10 minutes or so, there has been accentuated selling pressure that has come in. Look at the Nifty from that 720 mark, suddenly down 100 points and is now staring at 19,620. Ditto can be said for Bank Nifty as well. It's IT names which is actually putting pressure on the market. So Infosys has moved into the red. TCS, HCL Tech, these are the ones have taken a bit of a knock. Reliance, which was holding on to 1% of gain, that heavyweight too has kind of come off the highest point of the trading session. It's managing to hold in the green, but look at that slide that is visible on Reliance as well. And then the names like SBI, ICICI Bank, they're off the highs of the trading session. Naresh, what do you make of this U-turn?
So, like we discussed yesterday, there was reject volumes of CPSE and Nifty 50. And generally, last of the month sees in the last 20 minutes a lot of volumes from ETF. If we notice, we are seeing that happen across the board, whether it is Reliance or HDFC Bank. The volumes in the last 15 minutes are much higher than the volumes in the last 2-3 hours. So clearly an indication of some ETF reject sell volumes. Ideally, the trade has been to go long at 3:20 p.m. into the index and some heavyweights whenever this happens and keep a stop loss below the previous day's low.
Sunil, you understand the NBFC space so closely. In fact, one of your group company, the big NBFC, very successful, was on our channel 2 days back talking of a very high quality kind of growth, sustainable growth going forward. And one of the few NBFCs which is trading at a 52-week high. But today there is a note from Axis which has triggered some excitement in M&M Finance and L&T Finance. And I want to ask you, this entire 7-8 top quality NBFCs, which phase of the cycle are we? Most of them are guiding towards 20%, 25%, some SME ones 30-35% kind of growth, which some part of the market is quite cagey on. You have exposure to a host of these NBFCs in your funds. Is it early cycle, mid cycle, or late cycle?
I would say it's early to mid cycle because you see, as corporate capex goes up, banks generally come in at a late stage to finance. So a lot of the initial bridge financing, the loans against shares, the loans against real estate, right? In order to bridge the gap. See, promoters, when they are looking out for funding, they're hesitant to bring in the equity until the last stage, right? They would like to wait for that. Banks insist on that coming in. So you see that in the early stage of a capex cycle booming, it is the segment players like NBFCs, which have a quick turnaround time, and good quality NBFCs need to have the balance sheets to support these, and then the funding sources. These good quality NBFCs have access to medium-term funding sources, either through mutual funds or through retail deposits, right? So to that extent, right, the initial part of the credit cycle growth, right, will get led by this NBFC pack. And on top of this, right, the consumption, we are now heading into the festival season. We are heading into a summer, which will be consumer durables. It's an election season. So you'll have lots of liquidity flooding the economy. So the consumption drive is also on the back of NBFCs that have a clear lead over banks in terms of lending at the consumer and the retail end of it. So I think that we are at an early to mid stage of a credit cycle, and the speed of turnaround, the ability to not get structured into your lending and do unstructured lending where you have good collateral security, like I said, either of shares or of this, is a good harbinger for the NBFC number. And I think the home loan, for example, has, despite the interest rate cycle, is not showing a sign of slowing down. The premium homes are actually going, so people are mentally looking at expanding their homes, bigger homes, and I think that's where NBFCs have a big significant part to play in it. And I think we are fairly bullish on quality NBFCs within the financial services space.
Bullish on the quality NBFCs which are there on the space, and those quality NBFCs are on the market right now to raise the growth capital, whether it's Bajaj Finance, whether it's Manappuram, or the latest being Chola. So all of these companies are gearing up for the next leg of growth. But you know, it's a good time to take a coffee break on the show. I know Ajay is a coffee connoisseur as well. Yes. And tomorrow is the World Coffee Day, 1st of October. You're not such a coffee fan, are you?
I am a coffee fan.
Oh, you never treated us with one. I know third wave is something you've been talking and raving about. But you know, the other coffee which has been doing quite well in the city of late is Subco. That has seen quite a bit of interest as well. Tomorrow, of course, is the 1st of October, the World Coffee Day, and the coffee culture has managed to just get quite a bit of spike in the city as well. Let's listen into a conversation. Okay, it's actually on Sunday, I stand corrected. But let's listen into the conversation my colleague Aishwarya had with the founder at Subco.
There's been a vast shift for younger generations, whether it be millennials, Gen Z, even the sort of millennial plus, kind of segment, who increasingly see coffee as their outlet for socialization, for meetings, of course, for caffeine. So I think, yes, of course, traditionally India may be a tea drinking nation, but I think contemporarily India may be becoming a coffee drinking nation. So I think it is an interesting challenge. I mean, there is a certain translation of coffee, especially in the specialty segment, that is very challenging to get through to people, because for a lot of people, chai is chai, and it's simple and it's homey and it's warm and fuzzy and comforting. And of course, coffee can be too. But we try to focus on the complexity of coffee and all of its nuances, and why it's kind of increasingly become a premium offering.
International Coffee Day, 1st of October. Tell us about Subco's tryst with coffee and also your tryst with coffee. How did it all really kickstart?
Sure. Well, as I was telling you earlier, I mean, Subco is, it's a play on words. It's short for subcontinent, and in sort of Hindustani languages, it translates to for all or for everyone. So the idea with Subco was actually always very like mission oriented, where coffee, of course, was the passion and the output, and as was baked goods, which you see on the case over here. And now Subco Cacao as well. So we work with indigenous cacao farmers to create premium value-added chocolate products. But ultimately, Subco, what it stands for, what it sort of believes in, and the mission behind it is really about celebrating and highlighting the immense, diversity, cultural diversity of the subcontinent region.
What do you think were the turning points for Subco since the beginning of its inception?
Well, I think Subco was born in crisis, is the way I'd put it. A lot of people talk about being like COVID babies, I think is the phrase, but we're very much, we're like in the womb kind of COVID babies. So we started in about around March 15th of 2020, and about 4 days in is when the country sort of, went into its...
Okay, so that was about coffee, and the overall urban consumption itself has been picking up, hasn't it, in the country, Sunil, as well? Because we are seeing that the QSR space has been doing quite well, the entire theatre space, aviation, the urban consumption as a whole is the big talking point of late, Sunil.
Absolutely. And the shift from tea to coffee, I think what better to explain that you have a show called Coffee with Karan and not Tea with Karan. So... So I think, and of course, I'm a coffeeholic. Being from Madras, of course, the filter coffee is the best in the world. So, but you're right on coming to the urban consumption. So if you look at the premiumization of consumption, right, that's largely driven from urban. So you have the 7 lakh plus SUV cars, you have the 3-bedroom plus or the gated community villas, which are all in hot demand. So I think that, and you have retail branded garments and everything in malls all picking up. So I think India is going through the phase. And if you look at a study that we looked at, right, when nations go through the $2,000 per capita income threshold, right, and this we have seen in Korea, in Japan, in Malaysia, in Singapore, everywhere. When you cross the $2,000 threshold, right, the next decade is an explosive growth in premium retail, because that's when families are able to completely meet their basic necessities, and they have surplus personal disposable incomes on which you either save or you consume. And the Me Too, the fact that the internet, the whole cable television, the awareness of products across to buy. So, and everybody wants to be shown that they are arrived in life. I think it's a huge multi-year drive that I see in the premiumization of retail, which is essentially an urban phenomenon. In rural and semi-urban India, you're still trying to catch up on basic living standards with the urban life. But in urban, and finally, the COVID, if you look at it, while it was not so good news for migrants and laborers who lost jobs or whatever, actually the middle income and the higher income saw their per capita incomes go up through the COVID phase. And hence, that's why you're seeing some savings mutual fund SIP books rocketing up, as well as premium consumption going up. So I think this is a trend which we see India's per capita income doubling from the 2,300 levels to 5,000 levels in about a decade from today. Right. So I think that's a longer term drive, which I think the capital markets should also reflect in terms of the valuations it will give to these kind of companies.
Right, and that per capita consumption changing is definitely seeing an impact right now itself. But Kunal, come in on the charts of RR Kabul. That one has spiked as much as 12-13%. On the other hand, it's Phenolics Cables which is slipping. And look at that stock chart of Reliance. Suddenly made a big U-turn from a gain of over 1-1.5%. It's completely flattened out.
Yeah, so I'll start with Reliance. Strange selling because the stock was actually doing pretty well at 23.75. In fact, it was on the verge of breaking the 23.80 mark, which was I think yesterday's high for Reliance Industries on the futures. So this could probably be a mild setback into the stock. Again, we'll wait out for the stock to break past about 23.80 mark. I think that should happen for the stock possibly in the next couple of days. RR Kabel on the other hand, I think it's a phenomenal uptrend. The stock in the last 2 days I think has risen some 200 points. Remember, I think at 12.15 levels the move started for the stock yesterday. Even though the data is very limited for us to look at it on a longer term basis, but even the last 2 days of price patterns indicate that there's been some fierce buying which has happened to the stock price. I'm not sure whether this current level would be a good enough level to buy. Most of the hourly chart indicators, the likes of RSI, etc., they are extremely overbought into the stock. So I would probably wait out for at least another 3% to 4% cool off before maybe looking out for a intraday or a short term buy.
Okay, for now, it's a good breakout in RR Kabul. On that note, Sunil, we let you go. Thank you so much for making time and speaking with us, and have a nice weekend, a long weekend at that. But the question is, do you want to carry some positions over this long weekend or not? And if yes, what could be the BTST ideas? Nuresh, what's the BTST idea?
So first is a buy on SBI, which is setting up for a breakout going forward. Stop loss at 594, target price of 610. Second is a buy on ONGC, new 52-week high here, stop loss at 189, target price of 200.
What about you, Kunal?
So I'll go with Ultratech Cement as a buy. The stock looking extremely strong in terms of the risk reward. Contra buy would suggest a target of 8,500, stop loss at 81.30. And NMDC as a breakout, stock completing a triangular pattern on the daily as well as on the hourly charts. 170 as a target, stop loss at 140.
Okay, you know what? Come next week, there are a whole host of cues also lined up for us. So let's quickly go through that. Of course, it's a truncated week, so that's a bit of a breather coming in. But apart from that, auto sales, that will start trickling in from tomorrow itself. So come a Tuesday morning, we'll be reacting to that. You also have Bajaj Finance, which is going to discuss some fundraising on October 5th. So that also remains an important factor that we need to watch out for. You also have Cricket World Cup, which is starting in next week itself, October 5th. Of course, the warm-up matches have started from 2 p.m. today, but the official, matches will start from October 5th. And at the end of the week, the big event lined up, which is the rate decision that will come from the MPC. So that is important. But before we wrap, just 1.5 minutes left. Kunal, quickly your top auto, stock ideas, because over the weekend that data will come in through, and we'll quickly run the graphics as to what the expectation of auto sales are as well.
So I'll actually look at Hero MotoCorp as a possible breakout candidate or a potential breakout candidate. The stock has not done anything great in the last 2-3 months, but the last 2-3 days, the warm up for the stock as well has been quite strong. So I would probably go for Hero MotoCorp as a buy. Tata Motors has been one of the favorites which I've been highlighting time and again. It's now heading towards the 640 breakout, so I'll wait out for that confirmation, but even that stock looks very attractive.
Okay, Tata Motors, Hero MotoCorp, because other than that, the PV segment for Maruti, we are expecting a 6% growth, though month on month there might be a dip. Overall, the pre-festive sales have been quite smart, at least in the two-wheeler and PV segment, and that's what we are hoping for. But just 50 seconds left for the trading session and the trading week to end. In fact, the end of the quarter as well. And it's been a good close for the market, of course, not towards the 19,700 mark, so slip from the highs. But nonetheless, a 100-point gain coming in for the Nifty. The advanced decline ratio was pretty smart. And by end of the trading session, all the sector, actually most of the sectors, managed to end in the green. IT was being a bit of a flip-flop, but by end of the trading session, that is the only one which is ending with red. That's on account of LTI Mindtree, Infosys, TCS. They were down and out in the trading session. The star for today was the pharma space. Look at that big up move on Glenmark. An S&P rating upgrade coming in. You also had Aurobindo Pharma, which was excited ahead of the Revlimid launch. Granules, Lupin on account of that EIR for Nagpur facility, Metropolis as well as Dr. Lal Path Labs. All of these names are fairly excited. The other big intraday mover today was MCX, started with a cut of almost 8-9%, recovered most of it during intraday and then ended with a cut of around 2.3% on account of that transition being put in abeyance. Metals, Vedanta as well as Hindustan Zinc deserve mention given the fact they are looking at some value unlocking. Officially, Hindustan Zinc has said that they're looking at hiring some external consultants for value unlocking. So that stock was higher by 3.5%. You also had Hoodco, Imami on account of that juice foray, Sun TV, L&T Finance as well as M&M Finance, which were reacting to the Axis Cap note which were in focus. And then other names like Finelix Cable, RR Cables, which saw a big move on an intraday basis. So a lot of stocks from the broader markets which were bouncing around. But overall, ending the day on a positive note. Of course, it's a long weekend. So here's wishing everyone a happy weekend. But for now, we are wrapping up this edition of Closing Trades. Thanks so much for being with us.